of 3D Frankenpunk's fame, Beans fame, new member of the Tasty Crypto team, Dan Cecilia. Dan, what's up?
Hey, what's going on? It's great to make my debut on the Tasty Crypto show. Been really killing it with Beans in the morning with Shelly. Anybody in chat that doesn't know, we do this show Monday, Friday, 9 a.m. on the Tasty Crypto YouTube channel, and we give away free crypto. So if you want to be onboarded and you want to be entertained and you want something a little different from traditional markets, come over to the Tasty Crypto YouTube. Watch me and Shelly just degen into things and win some free crypto. So that's my shameless plug for Beans.
I love it.
And, great to be on the Tasty Live Network as well.
Yeah, man. Happy to have you here. Beans is a great show. You guys have been doing it for a few weeks now. And like you said, giving away free crypto. What's better than that?
Nothing.
Right?
Come get some free crypto. Listen, it's free. So I don't know what else I need to say.
Dan, we've got a lot to talk about today. Initially, we thought, and I did this last time, where we're going to have a wallet demo. We've got a new version of the app that we put out there. Go check it out. Available in the iOS App Store, and soon, within the next day or so, the version will be in the Android or Google Play Store. But I made this mistake last time, tried to run a demo when there was just everything else to talk about. We've got the chat popping off here, so good to see everybody. The gang's all here. If you're not streaming this on YouTube, get over there, type something crazy in the chat. But there's some blood in the streets, as they say, not just in crypto. Big move in the S&P, the NASDAQ, obviously, the VIX, I think last I checked, over 26. So we're continuing to see, some of the moves to the downside from last week materialize. I think everyone's question is, where does it stop, Dan? We've got some data points that we want to look at to maybe answer that question.
Yeah. Truth is, I don't know where it stops, but I think based on everything we can see in the market and sort of the unwind and how quickly this asset class moves, I think we are nearing a little bit of a short-term local bottom. Not sure where we go next, but if you followed these markets for a while, they move basically, they move double or 10x what you would see in like a traditional TradFi market. So not totally 10x, but just things are magnified.
A lot more volatile.
Yeah. So I do personally think we are nearing a local bottom. And I just think with the unwind in traditional markets, that hits crypto particularly hard. Over the last, if you've been following crypto markets over the last couple of weeks, we had a few narratives that sort of hit the top, right? I think that meme coin narrative was a big one. People were waiting for this Bitcoin reserve to try and push things higher. And so I think with those things kind of priced in, and then the unwind in traditional markets, that's where we saw this big kind of drawdown. Perps markets and some of the derivatives markets are also showing that as well. So we're pretty highly levered, and just that unwind is pretty nasty. So
yeah, for reference here, we have our performance dashboard on the screen. I put these numbers together about 3:30 Central Time this afternoon. A bit of a recovery as we've started the show. We have Bitcoin at 79.7. ETH almost back to 1900. So you can see a little bit of a bounce here, but down 15 to 17% on the week when we look at Bitcoin. Implied volatility has popped a little bit here. Much worse outside of BTC. ETH down about 30%, 50% on the month. You don't see that, or excuse me, on the 3 month. You don't see that all that often. And yeah, it's been pretty nasty just about everywhere, with the exception being Bitcoin Cash for some unknown reason to me. If anybody in the chat knows what's going on, let us know what's up. But it's ugly. That said, as you mentioned, we've done some research around this before, specifically looking at Bitcoin, but this is all the same, just with varying degrees of volatility. And what we found is that when you get these moves of this magnitude, which happen a lot more often than you might think, and quite often, the more volatile moves are actually to the upside, even though it doesn't feel like that or seem like that today. But when you see a 20% move on a weekly basis to the downside, you typically then get a bounce within the next month. And we'll go back to that show. I'll pull and refresh some of that research that we did. We'll look at this around ETH and others, but Bitcoin's just been around the longest. You're nearing those lows. Now, that doesn't mean that you can't go lower. And at times we've seen that evolve, I suppose, into a larger 30, 40% down. But that's typically following, a real risk-off catalyst that's specific to crypto. I think you're right in what you mentioned in that, this is all correlated at this point in time. You're seeing a bit of an unwind of some pretty concentrated positions in the AI, tech space, Mag 7, you name it. You can see that here in equities in the NASDAQ. And crypto is no different, right? This was bid up on Trump. This was bid up on digital asset stockpile, strategic reserve, et cetera, et cetera. And then once you finally got that news, again, seemed to be a bit of a nothing burger, at least given kind of what people were hoping for. And for now, we're just not going to sell the Bitcoin that the U.S. government has seized, which I think is a great start. You don't need that selling pressure in the market. But some of the catalysts that people were excited about have been removed for now. That said, yeah, it seems like we're nearing the lows. I want to jump to a couple of the data points that you showed me earlier, and we'll talk about those. But before we do, let's just take a quick look at volatility. When we rank volatility, this is not at the top of the range by any means. And I think anyone that's traded in crypto knows it's actually more volatile, a lot more volatile to the upside. This is an asset that has a lot of asymmetry embedded in it, right? It can only go to zero. It's not there. It has been pretty violent today, but you see more volatile moves to the upside. So not surprised that our IV ranks are only kind of mid-range here, but implied vol for Bitcoin back at 60. ETH is kind of trading towards the higher end of the range. You need about 88, 90 or so for the IV rank to be 100. But what I want to key in on are the expected moves. Looking for about a $6,600 move in Bitcoin, ETH about $200, Solana $23, and you can see that range for Bitcoin there, 72 to the downside, 85 to the upside. And it's moving quickly. So I wouldn't be surprised at all to see, a retest back at 85, but understand that the market is now, in implied volatility terms, pricing in a new low when we look at these weekly ranges.
Yeah, for sure. I'm totally...
Trade accordingly.
Yeah, trade accordingly. And I do think as we reach the bottom end of this range, it is a good time to bid, or at least based on what you have here, these ranges, it seems like a good time to kind of buy this local bottom. I am personally a little bit more keyed in on different niches in the market, less on a macro sense, but more just kind of bidding things that I know people are using on chain. I'm a lot different in the sense that I look at what apps are being used, what ecosystems and networks are being used, and I try and go in and I find just beaten down alts or beaten down.
Yeah, what are you looking at on a day where you don't want to throw the baby out with the bathwater? Arguably, everything is on sale here. There's some stuff that clearly is not going to be coming back, or at least not anytime soon, to the levels that it was at. When you look at memes, you look at AI agents, a lot of excitement that kind of blew up there. But where are you going? What's on your shopping list, so to speak? And if we could throw up the browser here, we can take a look at some of these data points as well that you're talking about.
Yeah. So basically, I'm looking at a few key sectors. I think DeFi 1.0, the Uniswaps, the Aves, some of those makers, some of those protocols are underpinning the entire on-chain ecosystem. And I want to make note that this is different from like Bitcoin, ETH, Sol. This is more on-chain DeFi specific. Those tokens are actually cash flow. They generate fees. They generate cash flow. They underpin borrowing and lending in the space. So I think that those are great tokens to take a look at. They're apps that people use. They're ones that are available in the tastycrypto wallet. Not yet on the platform, but in the wallet, you can come in and buy them. And I'm also looking at some of the more beaten down narratives like DeFi AI. There's a platform called Hyperliquid, token Hype, that I'm looking at. These are not what you would typically see on a normal trading platform. They're, again, in the wallet. So If you want to learn more about that, or if you want to come chat with me about what we're looking at there, yeah, you can see it up on screen. Those are applications that people are using on chain through a wallet extension or a wallet app. So if you want to chat more about that, come in our Discord. We can throw that up later. You could chat with me about anything more on the alt side, stuff that's available in the wallet. But, broader sense, if you've been in this market for a while and you're seeing blood like this, I mean, you just got to kind of stick it out and be able to feel comfortable bidding at these levels. So,
yeah, I don't think that this is anything structural in nature in terms of anything changing. There's no systemic risk event here. I mean, we've gone through a period of time where the largest exchange in the industry collapsed once it was known that it was a complete fraud, literally using customer funds inappropriately. And so you've gone through that selling pressure. You've seen that reset. I think this is more of a correction, in my opinion. It doesn't mean that it can't go a little bit lower here, but this has been quite a move, and we have at times seen similar moves of similar magnitude. Well within bull markets, you get these corrections. And I think it's to be expected. If you have an asset that can go up 100, 200% per year, you're going to get 30% pullbacks at a higher frequency. I think where it catches people off guard is just how quickly this reverses, right? And laid back trader is absolutely right. The hyperliquid chart is trash, and you can see here on the screen that's pretty much what we're seeing just about everywhere. Bitcoin dominance at about 62, which is going to again be about a multi-year high. So that's, I suppose, the bid to safety in the space. But in the larger market cap stuff, you do see these pullbacks, and I think that's the nature of it. This is extremely volatile.
Yeah. Most of these major bull market runs, you'd see 40% drawdowns. So again, you got to be prepared for the volatility here. Have some liquid cash to bid if you feel comfortable. I think we saw major outflows on the ETF products too. Something I don't track as closely, but I've been seeing in some of the data that I pay attention to. So,
So what are some of the other data points that you'll look at? We've got a couple other places we want to go. You showed me MV, RV, and the Z-score there, which is going to measure standard deviations. You want to start there and just kind of walk through other things that you're seeing that might indicate either we're nearing a bottom, or if people are questioning whether this entire cycle is over, how might you use this data to put some perspective around it?
Sure, yeah.
And we just need to go back to the browser that we were on there.
Yeah.
There we go.
Yeah, so this is an interesting chart. This is the Bitcoin market value, realized value Z-score, and basically what this is showing is standard deviations in the price. So when you see those big spikes, similar to a VIX, when you see these big spikes into that pink zone, that's an indication of extreme overbought territory, almost like top of cycle type indication.
So if I was thinking about RSI as an indicator for overbought,
sure,
to put it simply,
yeah,
this is something that you'd look at as well, where should you be concerned that we're going to top out, you might want to sell. It's right at these levels, and we weren't really even there preceding this move lower. And it's not that you have to be there, but these are the extremes.
Yeah, and you could see where it bottomed in 2023 and that run up into 2024. So, I mean, looking at it, it doesn't look like it's hit this extreme kind of like overbought top of the cycle, I guess, Z-score on it, standard deviation on it. So I believe that this is kind of a standard pullback in just, normal cycles with Bitcoin. Now, you can't look at this in isolation, right? It's every cycle is different. Every time period is different. We have a lot more liquidity on chain. I mean, even stable coins, the market cap for stable coins, which are dollars on chain, US dollars backed on chain, which underpin a lot of DeFi, pretty high. Visa does a great dashboard for this. So actually the credit card processor Visa puts together some statistics on stablecoins supply in the space, and that's all stablecoins that they track. So you could see it's sort of up and to the right. We get these periods of maybe like pulls back a little bit, but since about 2020, stablecoins have been steadily coming on chain, coming online. This underpins a lot of liquidity, a lot of on-chain transactions, and a lot of just general activity in the space. So,
I mean, this is what you want to see, right?
Right.
This is a pretty healthy advance in terms of growing stablecoin market cap, stablecoin volumes that often indicates new money flow
sure.
on chain. It's tough when we're going month to month, but
Right.
we're not necessarily seeing a period where this is declining as you did, from 22 to call it kind of mid or end of 23, where we then bottomed and you saw a lot of liquidity come back. And you saw that in the traditional sense as well.
Right.
So you're looking at the MV-RVZ score. You're looking at stablecoin market cap and the subsequent growth there. The other one I have up here, Dan, is the funding rate. I don't know why our heat map isn't loading, but can you speak to this a little bit? And this actually looks like it's just reversed in the last hour from where we were, which is maybe no surprise.
Yeah, so funding rate's a really important, indicator in the space. That is for the perpetual future product. Everyone in the major players that trade derivatives in the space, they trade the perpetual future. We can drop some more information to that about what a perp is. Long story short, there's no expiration. It goes off of a funding rate. These are 24/7, 365 markets. So this perpetual futures underpins all of the hedging and speculation going on in the derivatives markets. Largest player being Binance, DYDX, another one, Bybit, OKX. And what that's showing us right now is that funding rates are negative. That means longs are paying shorts. Longs are paying shorts. So that means to go long, shorts are paying longs. That means to go long, you're making money off the basis. So
you would think it would be an indication where as that funding rate goes negative, maybe an indication that you're going to see short covering in the very short term. And we're looking at this on a one-day basis. You can move this, across different time frames to get a sense of where we are, what that 30-day rate would be the equivalent of. And as you obviously extrapolate this on an annualized basis, you can see why, given where that rate is, you would start to cover. I don't think these are at extremes necessarily, but yeah, you're going to pay more money. It's going to cost you in terms of your cost to carry. You have a negative cost to carry in that sense. And most of the time that funding rate is going to be positive, where if you're long, well, that is your financing cost.
Right, exactly. Yeah, you got it. So an indicator that maybe like, hey, we're a little bit overbought, or just something that the derivatives markets tell us. And again, the perpetual product is what people trade in this space. So that's the one to pay attention to. It's basically underpins the basis and carry costs for the entire futures markets for crypto.
Yeah. Few indications here that, again, as Dan mentioned at the beginning of the show, might be nearing a short-term bottom. I think you can look around in traditional markets as well. A lot of times you get these larger momentum unwinds. We've talked about some of the flows that you see when you have a negative gamma dynamic in the equity space. When you think about dealers hedging options activity, it kind of only goes so far, both to the upside and to the downside, where things become fairly well hedged or perfectly hedged at a point. You'd really need something more to push it lower, to push volatility higher. Not that we can't go higher, but you've got close to a 30 VIX here. We haven't seen this level in a while. And if you also track some of the flows or the positioning, and you see some of this coming out of the larger investment banks as they talk about, what they see on their trade desks, CTAs, I think, have unwound a lot of the supply that they had, or you have certain levels that get triggered and these things feed on themselves, right? A lot of this is just risk controls and it's rules-based systematic trading. I think the last thing that I saw is that there's now a short position in there. So I think arguably a lot of this unwind has materialized. Broader correction. I mean, if I just look at where we are, let's go to the S&P. just as a kind of a proxy for all of this here. And we look at where we are. If I can get the, oh, I don't know how to work this, Dan. Apologies. I thought that we were going to get the same annualized performance up here, but I don't have it on the chart. But, this is a correction. This is not down 20, 30%. If you look at where we are on a year-to-year basis, Bitcoin especially is still very positive, or in very positive territory there. I look at, sector performance for a proxy around positioning and understanding just kind of how things are being rebalanced in the market. And all sectors were not down today. Utilities as, kind of, a fixed income proxy has been up. There have been other places to hide. You could be in bonds. So we're not seeing this massive, just broad-based sell-off across everything. And I think it gets you to a point where the market then starts to reprice interest rate cuts or the forward expectation for them. And eventually, you get more liquidity coming at some point. It doesn't mean that there isn't more downside, but I think a good chunk of this move has probably materialized here. But this is on the basis that you're seeing a slowdown in growth and inflation, and that kind of growth scare that we talked about in the email on Saturdays in February. There, looks like that's continuing for now. Clearly, the economy is a lot weaker than maybe we were told, and you're seeing that pop up here in markets, but. I think, again, my view is that whether this is in equities or, in crypto, more of a correction at this stage. I don't think that this is necessarily preceding some sort of, great recession transitioning into some sort of depression, and ultimately that would force the Fed's hand. And they got a little bit of room, with rates where they are. And again, we're not in an environment where there's QE that's ongoing or balance sheet expansion that's ongoing. So if you're worried about some sort of massive correction, at some level, they step in. I don't think that's what we're playing for necessarily, but just trying to put some perspective around what we're seeing here.
Yeah,
you could get right back up to, you're at 79.6 right now. You get right back into kind of the low 80s, and doesn't mean that you won't then trade off of that. But these things are moving pretty quickly.
I think narrative shift. I think there's always corrections, and we'll have to wait and see and just keep following those expected moves. But if you really want to do some crypto professional stuff, come into the Discord, chat with us, get the wallet. You could trade a lot more of these assets, and would love to teach you and just kind of show you what we look at on a day-to-day basis. That's kind of it.
Awesome. Well, Dan, we'll leave it there. Thank you again for coming on the show. It's a pleasure having you on here. I don't think this is going to be your last time by any means. So appreciate you stepping in. Katie is out doing her live bash thing. Make sure you get the digital collectible when that hits the streets. Until then, I'll be back on Wednesday with Shelly Van. Until then, I'm Ryan.
I'm Dan.
Peace.